Hulala Tokome is the PNG country manager and director of Puma Energy in Papua New Guinea. Puma Energy, of course, is a large multinational petroleum company with presence in 48 countries, and it's been in Papua New Guinea since 2014, I believe. Hulala, is that right? We're casting our memories back.
That's correct, June 2014. Yes.
I guess a couple of significant things to note. Not only are you a major petroleum importer, wholesaler, and retailer in Papua New Guinea, but for a wide variety of fuels, but also you run the country's only oil refinery out at Napa Napa, just outside Port Moresby. And the last time we spoke, Hulala, I think you were telling me that Puma was the country's largest purchaser of foreign exchange. I'm not sure if that's still the case.
Yeah, I think when where the oil price was previously, prior to COVID, and where it has come down to, although it has come back up again. We were quite our demand on foreign currency was quite large, especially when we were importing crude. So yes. But I think it's on its way back up there, and it's a cause for concern for us as well.
Well, let's talk about the fuel price first of all, because obviously that is something that's close to the heart of anybody who's got a genset or has to run a fleet or has to run commercial vehicles in PNG. How is the price going, and where do you see it moving over the next period of time?
Yeah, I think yesterday's fuel price. There was a bit of a roller coaster on yesterday's crude price. We saw a downward aggressive move as many countries in Europe extended lockdowns and movement restrictions to curb infections as well. But what we've actually seen overnight is that the price has basically come back up again. So again, this has instilled fears of a slower demand recovery than previously thought. So at this point in time, I think there is an OPEC meeting that is due on April the 1st of all dates, where they would discuss production cuts to help support forward oil prices. So I think for us in PNG, I think we're very much at the mercy of where the oil price basically fluctuates or basically heads, in those particular directions. But our impact is always a month lag. There's always a month lag impact in terms of the price that is applicable in country.
What about volumes that are coming into the country at the moment? Have they remained stable, or are they increasing or decreasing?
I think for us, volumes for us, we've because of where the energy sector or the power generation sector has moved towards, in terms of into the LNG space, we've seen a decline in terms of volume that is for that particular sector. But in terms of the our crude orders that do come in, we continue to maintain our crude orders. But big impact for us has been also on the aviation sector, and now with the isolation impact, that's also going to have a huge impact for us, because towards the end of the quarter last year, we were roughly around 50% of what we were pre-COVID levels. But now with the isolation that is going to be, or which has already commenced, that's going to have another impact on our jet demand as well, because we supply 100% of the jet in the country. So that's going to have an impact on that.
That aviation fuel is mostly imported?
No, aviation fuel, we manufacture aviation fuel here in country. So with the refinery, we're able to, especially with the reduction in jet demand, we are able to produce more diesel rather than jet. So we're able to tweak the refining process to being able to get more diesel as a result of the lower jet demand.
Do you foresee any interruptions to supply as a result of the current COVID restrictions, or do you feel that you've got things under control now?
Yeah, I think the community transmission has really had an impact, and I'm talking not only on our business, but also I would like to think that on other businesses as well. I mean, we've had our fair share of number of positive COVID cases, We're swinging to actually have bubbles created in terms of making sure that we maintain and sustain our operations in country, especially for the refinery. That's going to have a huge impact to our staff in terms of ensuring that, or mobilizing them such that they're able to have, for us to being able to have those lockdown measures in place for them to move to camp, such that we can be able to maintain business continuity. Our business continuity plans had actually kicked in about 3 weeks ago, so that's also had a that's also ensured that we continue to maintain operations in country. And there's as you can see, I'm working from home rather than in the office, but that's where we've been able to continue to maintain business continuity going forward. But the key piece for us has been the refinery operations, just to ensure that we maintain supply continuity in country.
Obviously, a lot of companies have had to shelve plans or redivert resources over the last 12 months in response to the COVID-19 pandemic and the consequent crisis it's caused economic all over the world. You have had investment plans to upgrade and refurbish Napa Napa. Are they still on your long-term plans?
That's still on our long-term plans. I think for us, we did a refinery TNI, which is a turnaround and inspection, back in 2018. And that's where the refinery goes through a 5 to 7 year, all refineries do that. They go through a 5-year turnaround inspection, maintenance upgrade, if you like, where the kit gets basically refurbished. For us, there's still long-term plans in terms of continuing to have that investment and upgrade the refinery. This year, we've got a very aggressive CapEx plan as well in place for not only the downstream business, but with the refining business, but also the downstream business as well. With the lockdowns, we are still positive that we can be able to, and optimistic that we can be able to get through those particular CapEx investments and upgrades to our facilities. And at the same time, for the refinery, that's pretty much the same thing at the same time. I mean, for us, it's being able to, I think, for us being able to have a product, especially within our gasoline or our petrol offer into the market as well. Having a premium product into the market, which differentiates us from the rest of the business as well within PNG. So that's also part of that refinery upgrade.
Let's talk a little bit about strategy or your long-term goals in PNG, and maybe let's look first of all at the downstream end of the market. Where do you see Puma moving as far as your future plans are concerned?
I think for us, it's been making sure that we continue to sustain what we currently have in place. Our business model will be changing this year, and there's no secret about that. In terms of how best we go about doing our business. We've also taken on our future energies business, where we're turning all our terminal facilities, having them all solar generated as well. We're working alongside with PNG Power as well for our smaller sites where we supply diesel to, in terms of having solar or part of our future energies business, being able to provide solutions for those smaller townships, and being able to move away from the oil dependency on diesel, or having diesel as a secondary source of power generation or backup to solar.
So you see yourselves having really a strong role, even though you're not going to be necessarily selling fuel. You still see yourself as going to be the supplier of the key technology for the energy for those kind of sites. Absolutely,
Andrew. And I think the thing for us is, if we don't change our business model, we're going to be left redundant in the market. So it's important that we embrace the technological changes that are evolving around the world, and we do also implement them within country as well. And that's an important element for us, because it keeps us relevant to the market. And at the same time, yes, there is a place for hydrocarbons in going forward. But the thing is that we also need to take on, have our future energies business being able to take it to that next level, where we become more like a one-stop shop energy solutions provider in country.
One of the, I guess, ordinary Papua New Guineans probably see Puma largely as a retailer. What's your plan for retail this year?
I think for retail this year, we plan to, we opened up a site on one of our new sites, which basically is, we've brought world-class facilities through to our Gerahu site. And I'm sure people who have actually gone and utilized the site at Gerahu will be able to attest to that, where it becomes more like a destination point rather than just a fuel station. And that's the concept that we would like to bring, in terms of being able to have a destination point for our retail sites. So it's, no one's happy when people come to the pump to pick up fuel. They're not smiling. So it's how we best can be able to change that mindset, where people are happy to actually go to a retail site, and not only do they pick up fuel, but there's a complement of different retail offers that are available. So it becomes more like a destination point. So we plan to open up another one of those ones here in Port Moresby. And as we speak, we even though we're going through the isolation period, we've closed down our Hulala site, so we're going through a major refurbishment there, and we'll also do a major refurbishment at our Waigani site as well. So and not only in Port Moresby, we're also doing that in Lae as well. So I think the thing is, our continued investment within the retail segment, retail business, will continue to evolve.
I'm sure you get a lot of emails. We get a lot of emails about it, so I'm sure you do. People out in the provinces looking to set up retail sites for petroleum. What opportunities are there for SMEs to get involved with Puma?
I think there is and this is I think in every week we get at least about 20 to 30 people coming in. I wake up from bed, we've seen a number of trucks drive by, and I think we can be able to set up a retail site. And I think the thing is, for us, most of these particular partnerships that we've got with retailers, because we only, out of our 100 retail sites, we only own about 25% or 25 or 26 of those retail sites. The rest are all dealer-owned, dealer-operated sites. And I think the thing is, where we encourage and we engage in partnerships with the SME sector, to being able to enable them, create them, being part of that enabling factor for them to being able to set up these sites themselves and run it themselves. Because if you look at the ICCC pricing model, by them owning the site, by them being able to own the equipment, they're able to maximize on the margin that is available in the market, because it's all price controlled all the way through. So the encouragement is always to actually get our operators, or even our SMEs, to run and operate the sites themselves.
Hulala, we've already touched on the need, I guess, to go greener. And that's something which is a global trend across the industry. We even see companies like Oil Search, who are 100% petroleum at the moment, looking to diversify as well. I think the French Total is changing its name from Total Oil to Total Energy, to reflect the fact that it's going to be a provider of mixed energy solutions in the future. But what other trends are there globally that may affect the supply of energy into Papua New Guinea over the next couple of years? What are you seeing globally in your sector?
I think in our sector, and this is where our future energy has come into play, because it's really also being driven from our shareholder, being Trafigura being our shareholder as well, and in terms of that green energy, being able to move into that particular fold, rather than focusing only on the hydrocarbons business. So for us, the focus is really going to be in that area, not only within the solar piece, but also in the wind piece as well. Being able to take advantage of that, and being able to implement that across our business businesses within the Puma world as well. But at this point in time, we're actually accelerating quite hard in terms of having the solar piece installed at our terminal facilities, and at the same time at two customer sites now that have basically taken that on. We're working, like I said, we're working alongside with PNG Power as well to look at a hybrid type of a solution as well, in terms of being able to supply that into the market in your smaller sites. Yes, there is the LNG space that focuses on the larger town installations, and then we've also got that covered as well with the smaller townships being on diesel, that we transform them to solar.
Hulala, you did indicate you were happy to take a couple of questions from our viewers this morning. So I just invite anybody who does have a question if they'd like to pose it. But there's a couple here from someone I believe is familiar to you, Ashley Houston from Ella Motors, which we might go to, and then see if there are any questions as well from other people. Yeah. The first question is about the change of the diesel fuel specification. Sounds a bit technical, but there is obviously Euro 5 and 6 regulation fuels, and then the current diesel fuel in PNG is compliant with only Euro 3. I imagine what Ashley wants to know is, can he bring in a different, more variety of vehicles if you're going to change the specification of the fuel? What are the prospects for that?
I think the prospects for that, for us, we operate within the fuel specs of the country, where the country specifications are 500 ppm. With the refinery, we usually manufacture well below that. It's usually around that 100 to 150 ppm that we manufacture in country. In terms of being able to bring in and do a blend mix, if you like, that we can be able to conform to the vehicle standards that in terms of Euro 5, Euro 6. Yes, we do have that capability of being able to do that. So it's not as if we're not able to do that. Our refinery does not produce that, but in terms of being able to see where the demand actually lies in that particular regard, it will be something that we can be able to do. And again, it's all driven from demand and the country specs that are currently in place.
Okay, so there's a challenge to your customers. If you want it, ask for it. And also, I guess the other one is unleaded fuel, premium unleaded fuel in PNG. Are we going to see that?
Yeah, I think I touched on that a bit earlier as well, in terms of creating a differentiator in the market. For us, being able to have that additive at our sites. You got Australia, you'll be able to see that at pumps. You'll have the premium plus the normal regular unleaded. For us, and that's part of that capex spend that we're doing this year, to being able to provide the differentiating piece in the market. So you'll be able to see that a number of our and that's part of our improvement at sites that we are looking at, in terms of refurbishing our sites such that we can be able to then start to create that differentiator in the market.
Right. So when do you think roughly we might start to see that?
I'd like to probably think that, if all going well, without any more further lockdowns, and for us to be able to have access to FX in country, I mean, we've got it all scheduled for implementation this year.
Marvelous. You do a lot of refining of imported fuels in PNG. What's the gap between what you can handle from locally produced oil and the oil you need to actually bring into the country? Could you use more of the local oil, or is it not suitable?
No, for us, we use, I think we're able to put it this way: the refinery capability and storage capacity can be able to supply the country, and especially where we're seeing power generation, being converted through to the LNG space, and at the same time to solar. It will obviously bring more capacity that we can be able to supply in country. So, in terms of what we do get from Kutubu and blend with other crude products to being able to create a crude slate that we can then be able to get the products and get the yields that we require within the market. We were able to do that quite well in terms of supplying what we do manufacture, that we can also be able to supply in country as well. So we rarely export diesel out of the country, but we do export the byproducts that come out from the refining process, such as naphtha, LSWR, which is a low sulfur waxy residue product. That also, so the refinery kit is a light sweet crude kit. So we don't get your heavier fuels or heavier oil stuff that comes out from the refinery.